Hey everyone, in this video I wanted to answer what I think is the better AI stock to buy right now, UiPath or Snowflake. UiPath helps businesses automate their tasks. Snowflake, of course, provides the data foundation for businesses to run these large language models. So they're both essential to the AI ecosystem. Let's look at which one is the better one to buy. Now, starting with comparing revenue, and you could see Snowflake just surpassed UiPath sometime in early 2021 and has exploded ever since. Revenue of 2.44 billion in the trailing 12 months, with UiPath revenue coming in at 1.1 billion. Snowflake has ambitions to continue growing revenue for the next decade, as does UiPath, while both companies have brought down their revenue growth rate forecasts. Their end result, they still think they can reach a large scale. The next metric I wanted to compare them on is operating income over the trailing 12 months, and Snowflake is heading in the wrong direction and quickly, losing 1 billion in operating income in its most recent trailing 12-month period. UiPath has turned things around and has started getting closer to becoming profitable on the bottom line, still losing 278 million in its most recent trailing 12-month period. Free cash flow is also considerably important because companies like UiPath and Snowflake use a great deal of non-cash expenses, one of them being stock-based compensation. So if we take that out, we can look at free cash flow more informatively, and we could see Snowflake heading in the right direction on this metric very quickly and much better than UiPath, generating 594 million in free cash flow. Then UiPath coming in at 94 million in free cash flow. But again, just like its operating income, UiPath is turning things around in this metric and moving in the right direction. Still, using stock-based compensation to make your free cash flow look better than your operating profitability is not without consequences. The more stock-based compensation you give out, the more the potential you can dilute shareholders. And if or when you ever become profitable, you're splitting those profits among more shares, thereby reducing your earnings per share. And lastly, I wanted to compare these two on valuation, and I chose to use the forward price to earnings ratio. And according to this metric, Snowflake is considerably more expensive, trading at a forward PE of 152 compared to UiPath, trading at a forward price to earnings of 41. However, this is one of those rare situations where I would prefer paying that significant premium price, right? More than 3 times as expensive compared to UiPath. I would prefer paying for Snowflake here because I think the potential is larger than for what UiPath can be. I think Snowflake has greater potential than UiPath in the long run, its opportunity. And I like that it's further along in generating these free cash flow. This is cash the company can use to reinvest in its growth, and it doesn't have any risks of needing to tap capital markets and raise additional capital. So for those reasons, if I had to pick between these two AI stocks right now, I would pick Snowflake. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.